All right, welcome back to Not Financial Advice. This is Sean, and today we're going to be taking a look at Microsoft stock. This is a subscriber request. So, as always, if there's any stocks you'd like for me to take a look at, just drop its ticker symbol in the comment section below. And we are going to get started on Qualtrum right after this.
You need to diversify your bonds.
The only problem you're going to have is that you didn't buy more. Because by the time you read about it in the Wall Street Journal, it's already too late.
Qualtrum is a suite of software that I pay for, but not one that I'm affiliated with. So I will leave a link for Qualtrum in the description below. But let's just dive in right away. This is going to be a little bit of a quicker video, so we're going to move fast. So stick with me, like the video, subscribe to the channel, and here we go. So Microsoft is a $2.8 trillion market cap company, making it a mega cap stock, one of the biggest companies in the world, one of the top 5 companies in the United States, thereabouts, and it's currently trading at a forward PE ratio of 33, which sounds a little bit expensive, but based on the amount of free cash flow and revenue growth that they have, it may or may not be justified, and that's what we're going to answer by the end of the video here today. So we can also see that Microsoft has a free cash flow yield of 1.91%. And additionally, we can see cash and debt. They have a lot more cash than they do debt. They have about 3, 4, 5 times more cash than debt. So that's obviously fantastic. And when we're looking at Microsoft and thinking about Microsoft, we do think of it as a growth stock, but it's also important to know that Microsoft is a huge dividend growth name. So they currently pay a yield of 0.8%, which is about a little bit more than half of what the S&P 500 pays, but they have a payout ratio of only 27%, a much higher dividend yield in the years moving forward. So we saw some of these metrics here, and now we're going to get a little bit of context and backstory. So I'm going to ask you to like the video and subscribe to the channel if you haven't already. And let's just do a really quick update on my portfolio today. So sitting at all-time highs today, I've just cracked $69,000. The S&P 500 is down 0.1%. And my portfolio is up 0.34%, good for $230 in gains today. Again, cracking $69,000. So that's cool. So there's our update on that. Now, when we get back over here to a chart on Google, we can see the stock price of Microsoft, and I've gone ahead and I've highlighted something, right? Because it's a question about this stock. And so Microsoft is essentially the company responsible for the massive returns we've had in the stock market in 2023. For all intents and purposes, a lot of the capital appreciation we've seen is owed to this company. So it's certainly worth taking a really, good look at. And so what happened on around January 20th of 2023? Microsoft went ahead, doubled down on OpenAI and ChatGPT. And so with Microsoft's investment in ChatGPT, the trade of this year was anything AI, almost a buzzword, not something that I think is a bubble, because it's something that average folks in their households are starting to implement on a daily basis, using AI to generate images, using AI to do research, using AI to give them answers to complex problems. And so that's just what's going on in my household. But AI is being used across industries for various things, and we're going to see more about that. So, like the video, subscribe to the channel, and we're going to move past this price chart pretty quickly, but it's important to stop for a second just so we have an idea of what's been going on with the price of the stock. So, in the last 5 years, Microsoft is up 272%. So, that's going to be market beating 54% a year, which is nuts. So what we can see here is that since that announcement happened with Microsoft's much larger investment in OpenAI. They made a smaller bet in 2019. It was something around $1 billion. And early this year, they invested something like over $10 billion. And so since January 20th of this year, Microsoft has gone up 55%. That's interesting. That's the same amount in this last year that they've gone up on average over the last 5 years. So we're seeing definitely steady revenue growth. This company certainly knows what it's doing. So let's use some of these tools that we have here with Google. So we can see October 28th, 2022, that was near the bottom of the 22 bear market. They issued weak guidance and shares sunk 7%. So we know how 2022 was. So now more recently, Microsoft shares jump as cloud revenue boosts earnings up 3% that day, October 25th, just a couple months ago. And so let's keep it pushing here, see what else we can see. So this is what we discussed, what we talked about. Earlier this year, in around January, Microsoft did go ahead and invest another $10 billion into ChatGPT maker OpenAI, and this is largely what's driven the Magnificent Seven, driven the returns of the S&P 500 and the total U.S. stock market. If not giving some buoyancy to international markets. And so the date on this was January 23rd, 2023, looking over here on Bloomberg. And what we can just see here is Microsoft Corp is investing 10 billion in OpenAI, whose artificial intelligence tool ChatGPT has lit up the internet since its introduction in November of 22. So there is that. So now we need to ask ourselves, what sort of role will AI or OpenAI or ChatGPT play when it comes to Microsoft's bottom line? And what's their level of investment? So what we can see here is that as of November of 2023, so about a month ago, Microsoft does own 49% of OpenAI. The other percent is owned by OpenAI's nonprofit foundation, but Microsoft has invested more than 13 billion in OpenAI. So up until January, they had around 3 billion invested, investing another 10 billion, causing Microsoft shares to soar. So what we can also see here is that Microsoft's partnership with OpenAI, which launched ChatGPT in 22, has allowed Microsoft to move past its rivals like Amazon and Google. Like the video, subscribe to the channel, and we're going to keep moving. So we have this date that we talked about. January 20th is when the news started breaking about Microsoft's investment in OpenAI, and we can see that this was near the lower part of the bear market. So the bear market, kind of bottomed out somewhere around October of 2022. And then with OpenAI's investment, ChatGPT with Microsoft, we saw that Microsoft shares were lifted 55% since late January of this year, 2023, which we're winding down. But that has helped to bolster the market, with the market increasing a solid 20.25% since January 20 of this year. And so, we have something like 15-16% returns on the market in the last 5 years, but Microsoft returning 55% a year. And the question is, can it continue? Can one of the largest companies in the world continue to grow and make you money as an investor? That's the question we're going to be answering as we move forward. Back over to Qualtrum, and we're going to look at some of the performance figures that we need to have an understanding of to assess the viability of this stock, Microsoft, the company, as an investment. So right off the bat, we're going to take a look at revenue here on Qualtrum, looking on an annual basis. What we can see, and the numbers that we'll be using for our rough DCF, is that over the last 10 years, Microsoft has grown at 10.5% a year. Now, in the last 5 years, you've even seen an acceleration to 13.9%. And in the last 2 years, bolstered probably largely by ChatGPT and OpenAI, you have an acceleration in the last 2 years of 12.3%. At the same time, the trend over the last 10 years is 10.5%. So we're going to be using this number for projections in our rough DCF estimate. So great revenue growth in this company, looks pretty steady, pretty sharply hockey sticking up and to the right, with $212 billion of revenue in the most recently reported last 4 quarters. Their revenue, it's a check mark. All right, check mark on revenue for Microsoft. Let's get into free cash flow. Free cash flow, up and to the right, growing at 8.4% a year. This is a massive check mark on free cash flow for Microsoft. Continuing to move forward so we can have an idea about the value, intrinsic value of this company. Looking at cash and debt, what we can see here is the most recent data we have here on Qualtrim is $111 billion in cash, just mind-boggling. $42 billion in debt. Surely they have a better credit rating in the United States. They maintain this high 100 to $120 billion cash reserve. And we can also see that debt is going down. So this will be an enthusiastic check mark. Again, Microsoft probably, besides being one of the largest companies in the world, is probably one of the highest qualities in the world. And you do have to pay for that. So let's figure out how much you have to pay if this is an investment that you want to choose for yourself as we continue forward. So looking at dividends, what we can see is in the last 10 years, dividends have gone up and to the right, very steadily, with a lot of confidence, moving boldly up and to the right, with your dividend yield increasing 10.3% on an annual basis. So dividends owned in Microsoft are going to help you to beat inflation about 3x. Again, they have a payout ratio of less than 30%. So huge dividend growth story. Very secure dividend. Another enthusiastic check mark on dividends. So let's keep pushing here. I'll ask you to like the video and subscribe to the channel. What we're also going to do is we're going to take a look at shares outstanding. And so although this company's stock has soared, they are buying back shares. A share bought 10 years ago owns you a proportionally larger piece of the company today. They are buying back shares at a rate of 1.25% a year. So this is a solid check mark. Moving forward, let's see if we can find an X. Spoiler alert, I don't think that we're going to. Let's take a look at ratios. And so their ability to uh, have a return on capital employed, their ability to take money from stock sales and bond sales and convert that profitably, is very high, very, very high. So in the last 5 years, they have an average return on capital employed somewhere probably in that 25% range. Check mark. Enthusiastic check mark. That is, some of the best returns on capital employed, especially for such a large company. So that's absolutely fantastic. Let's take a look sort of at their bottom line profit margin. Now, I really like this, and this is one I'm going to start putting more emphasis on. This may have been around the time the new CEO took charge, a little fuzzy on that. But one thing to understand about Microsoft is they are a toll booth company now, which is all about subscriptions. And so that keeps things moving up and to the right. It keeps things moving smoothly. 10 years, they had a 28% bottom line profit margin, now at 34%. Enthusiastic check mark. Absolutely fantastic performance here. So continuing, what we're going to see is lastly, we'll take a look at valuation. So this is on a relative PE basis. Let's look over the last 10 years. What we can see is they're actually trading at sort of this middle range of around a 30 to 35 PE. They've been more expensive in the past and less expensive in the past as well. So we're gonna give this one a pass. Valuation is probably gonna be the only problem with this company. This one's gonna be a pass, and so we'll mark it as such. So, out of all my metrics here, we have something like um, all but all but one, right? All but one are really, really good. So, looking at Investopedia, that is a little bit old, but what we can see is they have three primary business segments. So first and foremost is going to be intelligent cloud. And so this is Microsoft Azure. Their competitor would be Amazon's AWS. This is essentially cloud internet, so storage and other infrastructures for websites and organizations. So Azure cloud computing is 35%. Um, and because it's a few years old, let me simplify it. Their three business segments are essentially equal in revenue, although cloud is accelerating. But let's just get a very high level overview here. So we have the cloud, which is Azure, which is similar to AWS. We also then have, in second place, more personal computing. So that's going to be things like my Hewlett Packard laptop that I'm recording this video on comes with Windows pre-installed. Also looking over at my TV, which is connected to an Xbox owned by Microsoft, also part of this segment, more personal computing. And then lastly, we have productivity and business processes. So think Microsoft Office 365, Microsoft Word, Microsoft Excel, etc. And so this just sort of shows some of the different brands that Microsoft owns or has their fingers in. So of course we have Microsoft MSFT, the overarching corporation, with exposure and ownership to things like OpenAI, owning Activision. They recently did an acquisition of Activision, the company behind the franchise Call of Duty, which I play on my Xbox. We also have LinkedIn. LinkedIn is owned by Microsoft, a networking platform for professionals where advertising services are sold. Okay. Bing, a competitor to Google Chrome. Definitely very far behind. This is part of search, and so they can sell advertisement on here. They obviously own Xbox as well, and then a competitor to Zoom, Skype, they also own. But there are more companies that Microsoft owns, gives you that understanding of what this company does. And I'm going to actually just jump back very fastly here to um, Microsoft on Qualtrum. And what I wanted to demonstrate to you folks is sort of the revenue mix. And so what we can see here is around 55% of revenue is in the United States and about 45% of revenue is international. Super important. So what we have to understand is that there are essentially three equal business segments of Microsoft, and about half of their revenue is international. So a beautifully diversified company. I think definitely a company with a massive wide moat, very safe, very secure. It doesn't mean that a stock price can't fluctuate 50% in a year. We probably saw that in 2022. Um, but don't let that scare you necessarily. Not financial advice. Like the video, subscribe to the channel. So, our three business segments, we have productivity and business processes. And so, again, that was Microsoft 365, which is like Word, Excel, etc. So, this is one of their segments, productivity and business processes, also including Microsoft Teams, sort of like Slack or something that companies use to collaborate between colleagues, and then Microsoft 365 Copilot. So I think this is where they're integrating AI into their legacy portfolio. Office 365, if I'm not mistaken. So they also own LinkedIn, which they lump in within their business segment, which makes sense. And then also Power Apps, which is PowerPoint. So there's a third of Microsoft's revenue and business segment. And then we have cloud. So this is Azure. So Azure consists of public, private, and hybrid server products and cloud services that can power modern businesses and developers. Azure, among other cloud services. Now, more personal computing, we talked about it. So that's going to be Xbox, but it's also licensing Windows on computers like HP, Dell, Lenovo. I believe all of them come with Microsoft software pre installed. But then we have Xbox hardware, content, and services, games, Xbox games, and in game content. So reoccurring revenue, um, Game Pass, and other subscriptions, and then advertising within their gaming segment. So advertisements that you would see on Xbox. And then lastly, we have search, which is Bing. some different news outlets, some digital news that they have, and on Bing, they're incorporating that with AI. But also, if people are using Bing, there's advertisements that are on the side of the screen and things like that. So that's what we know. We have these three pretty equal segments: personal computing, intelligent cloud, productivity and business processes, and understanding that this American corporation with three essentially equal business segments has just a little bit under 50% of their revenue internationally, shows a very strong, diversified company. So this is their most recent quarter investor presentation. And so what we can see here, and this is sort of where we can look for the growth of the company in the future. But things like Microsoft Office and LinkedIn, what we saw is their revenue increased 15% in the most recent quarter. But in the cloud, so Azure, their revenue increased 21%. So this is becoming a larger percentage of the pie. When it comes to Xbox, they had device revenue that decreased 22%, whereas their overall growth in this segment was somewhere around, looks like 10%. So more personal computing, be it laptops or Xbox, is becoming a smaller piece of the pie. Their Microsoft Office 365 is really steady, but a lot of the growth is coming from the cloud, from Azure. The question is, can you make money on a company that's gone up 55% a year for the last 5 years? That's already one of the biggest companies in the world. That's the question: is, can you make money in this investment? And what does growth look like for such a mature company, um, such a high tech company? So it's mature, but it's also high tech. So I think we can see growth there. Like the video, subscribe to the channel, and let's get a little bit of a sense about what some future growth drivers could be that I'm able to see from my perspective. So, what is their involvement in the medical space? Obviously, an area with secular growth trends, all right? And so, breaking new ground in healthcare and the next evolution of AI, from the Microsoft blog. Uh, More specifically, Accenture supports largest migration of electronic medical record systems to Microsoft Azure. And then lastly, just to sort of, paint this picture for you, open AI powered app from Microsoft will instantly transcribe patient notes during doctor visits. And so if you're an American or you know about our healthcare system, um, it's very broken. It's very broken with insurance and how much coding and charting that physicians and their assistants have to do. It's a lot of heavy data. It's a lot of heavy data that isn't even being utilized. They're not looking at the data to develop trends for improved healthcare, and the doctors are being bogged down. And so I definitely see Microsoft being a player in healthcare moving forward, with different hospitals, both domestically and internationally, wanting to partner with Microsoft to take away that pain point from physicians, allowing physicians to offer better care, which will benefit all of us. So certainly a company that's doing great things in this world, and one that I'm proud to own. So lastly, we'll take a look at another growth driver, and then we're going to be getting back over to our estimate of the fair value of Microsoft stock. So this is a little bit on the flip side. So Microsoft has some partnerships with the U.S. Department of Defense, a little bit of exposure to that aerospace and defense, just a skosh, tiny smidgen. So look at this. Maybe they got the inspiration from Call of Duty, but Microsoft is making augmented reality goggles for U.S. soldiers, U.S. troops. So things that are going to be able to allow a sergeant or a commander to see a live view of what one of the soldiers is doing, something that may show the direction of a compass on the soldier's readout, a system that might integrate with the soldier's weapon, possibly firing around corners, of things of this nature. So this is something that could end up being a $22 billion program. That would be 10% of the revenue they did in this last year, I think. So it'd probably be spread over the next 10 or however many years. But again, along with the healthcare, this military application, more growth drivers for this mature high tech company. So coming back over to the price of Microsoft, stock shares are down 0.17% today. Microsoft stock trading at $374 a share, which is very close to its all-time highs. So Microsoft is trading down less than 1% from all-time highs. So we'll say it's at all-time highs, right around $375. All right. So as we just saw, Microsoft shares are trading near an all-time high of around $375. So we want to figure out what they are worth per share. And so, as you'll remember, on Qualtrim, we saw that the growth rate was around 10.5% on average a year over the last 10 years. And so I've used that number to make a conservative projection of 9% growth over the next 5 years. Years 6 through 10, I'm projecting a 7% growth with a terminal multiple of 5% because of Microsoft's almost 50% exposure to international markets, which may grow faster than US GDP, as well as their connection to things like AI and healthcare, things of that nature. So a discount rate or required rate of return of 10%. And then we took the shares outstanding again from Qualtrim. And the company is sitting on about $42 billion of debt, around 111 billion dollars of cash on hand, and free cash flow of $46 billion a year. And so pretty crazy numbers. They could pay off all their debt with 1 year of cash flow and then still have $111 billion of cash. So based on all of these assumptions taken from Qualtrim and my opinion, $375 stock, fair value, only 175. And so, this is a company that's trading at that 431 or so PE, sort of in the middle range of where it trades on a PE multiple. And so it does appear at first glance that this stock is in fact fully valued. So let's take a second and ask ourselves the question, do we really believe that if we invested in Microsoft today, that the shares would not be worth more in 10 years? No, I don't believe that. And so the average return for stocks over the last 100 years is something around 6 or 7%. Let's go ahead and keep all of the other assumptions the same, but lower our uh, desired rate of return or desire annual gains to just 7.5%, a little bit more of a normalized rate of return for stocks over long periods of time. Looking at a $375 stock here on Microsoft shares with that lower rate of return, we can see a fair value estimate of uh, nearly $350. And so, while I think that Microsoft is fully valued, I think there are growth drivers in the future. And I think if you were to invest today, you'll certainly have more money in 10 years. Again, there will probably be a re-rating as they increase their dividend yield, which may start to happen in 5 to 10 plus years. Um, but yeah, that is it. Those are my thoughts. Thank you so much for tuning in. Again, if you have any other stocks you'd like for me to take a look at, go ahead and drop its ticker symbol in the comment below. Like the video, subscribe on the way out, and I will see you on the next one.